Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks for having me back, Jim.
Ross, last week, CMHC came out with a report that effectively blamed baby boomers for failure to vacate their homes for the next generation as a reason why home prices rose so dramatically. Are us baby boomers really the bad boys on the block?
You know, when you don't grow your housing stock, when you implement policies that don't allow builders, carpenters, framers, developers to build enough homes for your population over the last 30 years. At the same time, you allow your population to grow at a substantial rate, and then you have all the consequences of that arrive beginning around 2003 and to last over the last 16 years. You start to seek out scapegoats. You start to look for places where I've got to blame something else because we can't be blamed for this. And in my personal opinion, Jim, this is a 100% blame that should be falling on the feet of CMHC. CMHC employees and staff has held themselves out to be housing experts since CMHC was first formed. They have made no recommendation outwardly to the public about how a society changes and evolves, and the consequence that has in your housing stock. So I'll explain it this way. Between 1990 and 2016, the average life expectancy of the average Canadian increased by 6.5%. 5 years. A staggering, great improvement in the lifetime of Canadians. You're going to live for an extra 5 years. So what I'm saying is, the last time a housing correction rolled around in Ontario was 1990. Okay, back then, the average life expectancy was only 77.4 years. Now, when this correction rolled around, it's 82.3 years. 5 more years.
Yeah, we're pretty well tied with Japan with the second highest life expectancy in the world.
There you go.
Darn. Huh?
So along with a longer life expectancy comes a better quality of life. I mean, there are guys. Well, look at my dad. My dad is 83 years old. The guy gets up in the morning and literally works as if he's 50 the entire day. Now, they've chosen to live in a part of the country where there's lots of activities. So whether that means he gets up and uses his chainsaw, whether it means he goes down to the beach and throws rocks so that my mom can walk down to the have a nice pathway to be able to go take a swim in Georgian Bay, or it's the middle of winter and he's got to go out and get his snowblower to blow out his 250-foot driveway, he's able to do those things. I mean, his father died when I was 3 years old. So my dad didn't even get to enjoy the lifetime of his father as a mature adult, where I have. I mean, my dad was my partner for 20 years. We were best friends, working hand in hand for 15 years. And when I look at him today, he is the example of what the housing analyst should have been planning for. There is no way, nor should we expect, that someone who is healthy, enjoying life, who doesn't need assisted living, would move out of their house. Now, at the same time, my mom and dad are getting at the very end of their lifetime in a single-family detached home, especially one on Georgian Bay with a half an acre of land to take care of, and a 200-foot driveway in the middle of a northern Ontario winter. But they're now seeking another detached house. They're going to move to southwestern Ontario, back to where they were initially born, and they will probably live there till the rest of their life. They're not looking to move into assisted care. They're not moving to look into a condo. They want a single detached home, a small single detached home that is all on one floor. And that's what they're going to buy. And that's what they should do. CMHC and our government, our politicians, should have been planning for this. When we set up a profile for someone over their lifetime, even back in the 1980s, we were telling people that you had to plan for a longer life expectancy. But apparently, CMHC didn't plan for that because they would have grown the single detached housing stock at a higher rate than what they grew it. They would have been encouraging politicians to put policies in place so that at the provincial and municipal levels, more land was cleared to build homes. It's got nothing to do with the choice boomers make impacting millennials, the prices millennials are expecting to pay for a single-family detached home right now. First of all, housing prices are dropping. Wasn't even addressed in the report. Housing prices are dropping. They have plummeted. They have had historic corrections already in British Columbia and Ontario. A magnitude of wealth destruction never before recorded in the history of this country. When I started selling real estate in 1987, it was the spring of 1987 when I started. And in the fall of 1987, something happened in October that remains talked about till this day across the nation. People still went out and bought houses. People still went ahead with their lives. People still went ahead and moved forward. The government, CMHC, should have been encouraging the housing stock to grow at a rapid enough pace to offset changes in life expectancy. And it's going to get worse. So this little tiny 5-year gain that we've made as a people in this country over the last 30 years because of healthcare improvement, it is set to skyrocket. We're working with people in the medical field who are doing research, who themselves believe they're already in their 50s and 60s. They truly believe their life expectancy is going to hit over 100 years old. They expect that in their late 80s and early 100, that's centenarian, whatever the word is, Jeff, when they reach that age, they are still going to have a good quality of life where they're active and proactive members of society. They're expecting to be working into their 70s and 80s in the medical field. They do not expect any mental breakdown to happen at all.
Well, Ross, I didn't reach what I wanted in real estate until I was 61 years old, near retirement. And there's no way in hell you're moving me out of where I am right now until I'm ready to be looked after. So why should I have to vacate a nice home?
Of course. And back in 1990, we never would issue those words to someone who lived in their house who was 60 or 70 years old. We would never have said, oh, we need to move you out so the next generation can move in. No, what we would say is we need to build more homes. The problem we have today is, especially out your way, Tim, in Vancouver, is the green movement, which misidentifies what the real meaning of green living is. Green living happens if you have a family or if you have choice, a single detached home with a backyard. It doesn't matter that they had to clear some land in order to give you that property. That property allows you to have a garden. It allows you to have a place for your kids to play. It allows you to have a garage. It allows you to have a better quality of life. Now, what I mean by that is there are people whose health quality, the quality of health they have, improves because they get to go outside and work in their garden every day. They don't need to go down to the local gym to work out. They can work in their garden. There are people, this is a bit of a male biased comment, because there are women who work like woodworking as well. But I'm going to use that example because there's a historical viewpoint on this. There are guys who want to have a workshop out in their garage. That keeps them mentally healthy, it keeps them physically healthy, and it extends their life expectancy. They don't have to go outside of their home to find it. It's all right there. Yet we don't hear government saying, for the health of the nation, we need to build more single detached homes. What we hear is, we need to build more and more condos, shoving people tighter and tighter into smaller condos, and the new people, the young people getting into the market are being forced to buy small condos, not condos which are full-scale, beautiful apartments. They're being put into little tiny hotel rooms, basically, and the government is telling them this is the way it's going to be. No, CMHC was wrong because they didn't forecast how the average life expectancy of homeowners was going to impact the housing stock. They were still believing that around 65, people were going to start moving out of their home. Well, I'll tell you, like you just said, Jim, most people when you're 65, you're thinking about upgrading your home still. You're thinking about upgrading your home so you upgrade the quality of life that you have. And that's where the problem occurs. We have had 30 years of bad housing policy in this nation. It has been steered by self-serving, self-interest groups who do not have any desire to improve the quality of life of the average Canadian. Because if they did, we would not have had the need or the outcome of the housing bubble that we had. Because the government simply built enough housing stock, at the same time enforcing existing laws to make sure the speculation wasn't happening, the money laundering wasn't happening, and in turn also limited foreign buyers buying up cheap Canadian real estate, which in many cases to a foreign buyer, Canada is cheap Canadian real estate. This never would have happened. We wouldn't be where we are right now. We wouldn't be faced with the problem we're facing as an economy right now. The government cannot raise interest rates. We are at historically low interest rates, and because of the errors from 1990 through 2019 in housing policy in this nation, they can't raise rates. When you can't raise rates, as we talked about in the show, I believe almost 2 years ago now, which we call the interest rate trap, when you can't raise rates without a recession happening, your hands are tied. We're walking into a federal election where not one single party that's running to be elected is even discussing growing the number of backyards in this country. Not one single party is discussing that. We hear climate change. Climate change to us means politicians are going to force you to live tighter and tighter together on more and more concrete with less and less grass. At the same time, the animal species around your city are going to be offered greater life experiences through constraining your life. CMHC was idiotic by releasing this report. There is no need to divide this nation based on your age. Boomers paid more interest over their lifetimes than millennials will ever even think about.
We'll have more. We'll have more with Ross Kay right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener was asking, since according to Aussie Jurrock, the Vancouver housing market has bottomed. We'd like to know what Ross thinks of this. Also, what does Ross think of buying into a strata co-op building, wise or not? We know about the 35% down payment.
The Vancouver housing market, in terms of sales, has bottomed, but that was signaled months ago. Sales mean nothing. So I want your listeners to understand, a housing market does not bottom by the number of sales being recorded by a local real estate board, because sales have not bottomed. When you combine the new home sales, which generally are not published anywhere accurately, against the local real estate board sales, your sales are still falling. That said, they will bottom, and they're very close to bottoming now. Sales, that's got nothing to do with the bottom of a housing market. A housing market bottoming is measured by price. How much house can I buy today for a home buying dollar versus which I could have bought at the peak of the market? This pattern is followed over and over and over and over again through the trading cycle, okay? We had the longest trading cycle in Canadian history because the government continued to drop interest rates. So, your Vancouver housing market has not bottomed. Sales are going to reach the floor. They just can't go any lower. There's a certain amount of people who are going to be added to the population. There's a certain amount of people who are going to move from rental stock into the ownership stock. There's a certain amount of people who are going to get job relocation. That is a floor, the floor that you're going to reach. You really can't go below the floor. But you measure a housing market by price, not by the number of sales. In terms of the strata, I'll use this example for these folks. There is a part of Vancouver where a native population has leased land to people on 60-year leases. It's in the south part of Vancouver, near the golf course there, south of the University of British Columbia. I slipped in my head the name of the native group that owns the land.
Musqueam.
There we go, Musqueam lands. Okay, when we look at those rentals, huge, gorgeous homes, many of them in need of renovation. We look at them also offering 50-year leases remaining, 40-year leases in some cases. The price of those houses, including the lease, if you take the full amount of the house and you divide it by the 40 years that you're going to live there, plus the cost of the land, you couldn't rent a house in Vancouver for the price that these people are offering it to you. Plus, you have a location and a home of a size you couldn't even imagine getting a hold of, except for some of these new ones where they're trying to avoid the vacancy tax. You need to look at the difference of a strata or a condo, for the sake of the argument. Okay, a co-op or a condominium. You simply have to look at whether or not it is the most affordable way for you to live. Don't be thinking about it as an investment. Okay, it will go up with inflation, house price inflation, over time anyways. If you own it for the next 30 years, it will go down in price till it bottoms, and then it will go back up so that over 30 years from now, you still would have gotten your house price your house price inflated value. It's still going to be a wise decision that way. Whether or not it benefited you from financially needs to be looked at before you enter the agreement to purchase it. You need to purchase it with a 30-year understanding. And you say, oh, Ross, we want to stay there for 10 years. Now you're into a different discussion, because then you have to look at it over a 10-year window. And that calculation is totally different than one that's 20 or 30 years. So, when you say, is it wise to buy or not, it depends on your individual situation. It's going to depend on the strata that you're looking at buying, and it's going to depend on the type of home that you're looking to buy in that strata. All of those questions need to be answered before you yourself and no one else will determine whether or not it is a wise, safe, low-risk decision for you to make. That is something for you to decide. You shouldn't listen to someone else. You should have all the facts in front of you. A 30-year plan, 10-year, 20-year, 30-year plan. And you should make a rational decision. Don't listen to someone who tells you the Vancouver housing market has bottomed.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN. and the OTCQB symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Later this week, the Canadian Real Estate Association will release their July sales stats to the masses. What do you think they'll report, and how accurate will it be?
What are they going to report? They're going to report the same thing Real Estate Board of Greater Vancouver reported, and all the realtors in Vancouver have agreed is true. Same thing in Toronto. Whatever the Toronto Real Estate Board reported and what all the realtors reported was true. About a 20% gain they reported in those two cities. Quebec's still hot. These two markets have bottom stabilized. Toronto's gone back up. It's all hogwash. It's all nonsense. What they're recording is 2 different months. July of 2019 is not July of 2018. They are totally different months. You can't even compare the 2 months because sales from June of 2019 were moved forward into July, and sales from August of 2018 were moved back into July of 2018. You're dealing with numbers that are designed solely to confuse the public to go out and spend money on real estate. You will be confused this week, as will every housing economist in Canada who thinks they know what they're talking about. If they knew what they were talking about, they would have called Alberta in 2013. They would have called Vancouver in the fall of 2015. They would have called Toronto in the fall of 2016. They didn't. You can believe whoever you want to believe. The Canadian Real Estate Association is going to give you another press release this week designed solely so that their members can earn commission. Nothing more, nothing less. 20 years ago, folks, everybody in Canada knew that was true. Somehow, over the last 20 years, that has been forgotten. That's what's going to happen this week.
Ross, thank you so much for chatting with us.
No problem, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.